At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth.
Once again, let me say I'm honored to be here today to share our perspectives. Last time we met, we had no presidential candidates. Everything was speculative. Things are clearer now, but the more clear it seems to become, the more cloudy the outlook seems to be. So without much ado, I'm going to share my screen and take us through a very, very interesting outlook. The title of the outlook is Economic Outlook in a Period of Political Squabbles and Investor Uncertainty. Okay, so you hold on while we. Can you enable us to share, please? Yeah.
Okay.
The screen is
Yeah,
we can see your
Yes, all right, thank you very much.
Yes, sir.
So, economic outlook in a period of political squabbles and investor nervousness or investor uncertainty. That is the theme of today. And every investor out there, global, regional, and domestic, is concerned about, should I invest? Should I keep my money under my mattress? And if I should invest, what should I invest in? Why is that? Because this is an era of unprecedented inflation, rising interest rates, political and geopolitical crisis, tension. Some fear stagflation, some fear another recession, and some fear a conflagration into a world war. Don't forget, in 1913, it was one assassination in Sarajevo that pushed the world into a 7-year world war, in which about 17 million people died. Similar incident in 1938 triggered the crisis that left the world at war for 9 years. So we don't know. What we call these are interesting but uncertain times. So what are we going to talk about today? We're going to talk about indicators that are relevant to the markets and investors because our audience is full of investors, most of them nervous, most of them uncertain, and the fear we've lost somewhere anywhere between 60 or 70% in the last 2-3 months. In the US equity market, we've seen massive losses. We got into a bear market, but it started recovering. So markets are jittery. There are also pockets of opportunity. So, and are there risks? Yes, we'll talk about the risks, and then we'll conclude. So typical of normal presentations, I've told you what I'm going to tell you. I'm going to tell you what I want to tell you, and I will end up telling you what I've already told you. Right? So let's start with indicators that are relevant to markets. Firstly, the indicators that are very relevant to us at this time, being you an economist or market analyst, what is happening to our gross domestic product in Nigeria? What's happening to the fiscal deficit? Because we talk about the fiscal deficit is the amount by which your expenditure exceeds your revenue. And you have to fund it either by borrowing, right, by extra taxes, or by just borrowing from the Central Bank of Nigeria. Inflation, we've seen inflation at 40-year highs across the world, and we've seen inflation at what I call a 7 or 12-month high. But is inflation being published in Nigeria, is it reflective of reality? We'll interrogate that. Then the almighty We'll talk about money supply. Is that the major factor that is stoking inflation? Then we talk about the exchange rate, which is everybody is confused. Now it's in the parallel market. It is at 615. When we met last, it was about 602, 603. In fact, about 600 when we met last. So we've lost 15 naira to the dollar in the last 2 months. We look at our external reserves and what we call the gross external reserves. Typically, we look at the net external reserves. How much of those reserves are available? How much of them are encumbered? How much of them are in gold, SDRs, in dollars, and yuan? We look at that. Then we look at the stock market performance. Is there a rally? Is there a dead cat bounce? Is this a sizzle that will fizzle? How broad is this rally and how narrow is it? And can you expect good times to roll? So what do we have? We have inflation, and we've talked about it. Talked about money supply, interest rates, exchange rate, and the importance of all of these things. Now, look at our growth. Nigeria's growth here is in light blue, okay? And you can see it. Nigeria's GDP growth is way below that of South Africa, Ghana, and Rwanda has the highest. That's a deep blue color, followed by, to a large extent, by South Africa, which is oscillating, then followed by Ghana, and then ourselves, Nigeria, so I would say the fourth, and then, of course, the lowest being that of Angola, which is climbing. The deviation between Nigeria and non-oil producers is wider, that is 14.85%, and that with Angola is 4.5%. So economic characteristics are very similar to that of Angola, but also different from that of South Africa, Ghana, and Rwanda. South Africa, Ghana, and Rwanda have embarked and implemented reforms. So there is a correlation between reforms and economic outcomes. That's what it's telling you. Within Nigeria, what is happening? Some sectors are showing more resilience than oil. So look at the sectors, and you can see the high. Rail transport, very high, 124% growth. Financial services, 25.43%. ICT, which is telecoms and all that, 12%. Trade, 6% growth. Manufacturing, 5.89% growth. Construction, 4.83%. Real estate, 4.4%. All of these sectors have outperformed the general level of growth in the economy. So they are doing well. But look at the big laggard in the room. Minus 26 petroleum. And Nigeria is a petroleum crude oil. Why? There's oil theft, oil vandalism, and marginalization of the sector, lack of investment. So, right? Oil vandalism, there's complicity of the law enforcement, failure of anti-corruption. If we are losing an average of 200,000 to 300,000 barrels of oil a day, there's been no arrest, no indictment, no conviction of anyone for oil bunkering and stealing. So, the gap between what we are producing and what we're exporting is about 510,000 barrels. So, that's the value of the oil theft. Now, let us look at the sectors that are expanding. The sectors are expanding, and do they employ people? Rail transport employs 4%, so it's good. Financial services employs 1.5% of the population workforce, good. ICT 0.7%, trade 17%, manufacturing about 8.3%, construction 2.7%, and real estate 0.1%. So, from a macroeconomic perspective, the sectors that are expanding are the ones that are employing people. But how sustainable is their growth? So that is the real GDP growth trajectory you can see there. Some of it, agri planting season, and political crisis, herdsmen, and all of that. Now, why is the construction sector expanding? Because of increased public sector spending. You know, elections are coming, politicians have to show off, and they have to announce projects. I remember last year, the River State governor every week he was commissioning projects everywhere. Of course, he had his eyes on the bigger price. Now that he hasn't got the candidature, maybe I think we've seen less of the commissioning of the projects ever since then, right? The same thing, all these governors who want something higher, they play on the minds of people, but that's not the issue. It's not about projects, it's about impact of those projects. Trade, function of border reopening, forex availability, and the forex price. Because once the exchange rate increases beyond a particular point, people cannot afford what you import, and therefore you will have your inventory high. I went into 2 supermarkets over the weekend, and all of them were complaining that yes, the goods are here, but people are not buying. So how can they buy at those prices? Okay, so that's where we are. In terms of ICT, we have e-commerce, and but you see, financial services, manufacturing. Now let us see for construction, and that's where the opportunity is. For construction, we have BOA, Dangote, Julius Berger, right? So actually, BOA Cement and Dangote Cement are building materials, but their products are inputs into the construction sector. So you have Julius Berger quoted. Real estate, we have UPDC quoted. For financial services, we have Access, GTCO, we have Custodian and Allied, we have a number of insurance companies. And in ICT, we have MTN and Airtel who have been doing very well. So for investors who are on this call, you look at these stocks. When we get to the stock market section, we'll tell you what the performance is like. For manufacturing, you have heavy manufacturing and light manufacturing. Light manufacturing, mainly fast-moving consumer goods. So you have Nestle, Flour Mills, Guinness, Boa Foods, Nigerian breweries, South African breweries, and all. So you have the soft drink segment, which is carbonated soft drinks, and then you have the total beverage and alcohol segment. So you have, but the other thing that we've seen, and we'll address that when we get to the equity section, is that the companies that are bold, the companies that take the initiatives, that take the bull by the horn at the right time, right, always benefit from it in Nigeria, because even though it's not patriotic to bet against the Naira in the long run, but these people have bet against Naira in a way, they bet against Naira in being long in cash, right? Being short in Naira cash, but long in investments. So let us take Dangote. Dangote took a risk in going into the cement manufacturing business. He bought into Abuja. He was a marginal player, and now his total output is almost 70% of the industry. Lafarge had a near monopoly when Dangote went into the business. Today, Lafarge has less than 20% of the market. He then went into vegetable oil and sugar backward integration, took a position, expanded, and took a position. And when he did this Abuja cement, the average exchange rate was about 160. Today, he's selling the cement with the revenues when the Naira is 600. So the cost in nominal terms is at 160. The revenues in nominal terms is about 600. So making money. Same thing in fertilizer, same thing in refineries. We'll see how it goes. Let us take a look at Guinness. Guinness did the same thing. They did the rights issue, brought money in, expanded their plant, modernized their plant, massive capex. And the exchange rate was 200. Today, they're selling the products when the exchange rate is 600. They're making money like bandits. Let's take a look at MTN. MTN expanded, put in capex, did everything they had to do. Faced a massive fine. Fine by the federal government wiped out 80% of their global market capitalization. Today, they are flying high because they had the courage. So what do you need to succeed in this manufacturing? You need to have foresight. You need to have the cash to invest, And more than anything, you need big balls to be bold enough to take the decisions you have to take. So here we go. The sectors that you can see them here: trade, transport, manufacturing, ICT, financial services, and construction, agriculture. And there are also areas that actually benefit, because in economics we have what they call linkages. Transport and logistics, major area. I was reading yesterday that FedEx price has increased by, the share price has increased by over 7% at the time when the market was going. So effectively, FedEx price has gone up by almost 30%. Why? Because there's simply no space in logistics. My colleagues will tell you that to get air freight space into Nigeria today, even if you are well connected with all the resources, the earliest you can get your products into Nigeria will be 2 to 3 weeks. And that's if you're connected. If you're not connected, then you're sunk. Lufthansa wrote to everybody yesterday saying, sorry, we will not get back to normal again until the summer of 2023. Heathrow Airport is reducing the number of flights because they don't have the capacity. It's not like a switch. So aircraft that have been mothballed for 2 years, you can't just bring them and start flying. There's a process, those mothballed aircraft, which were eventually in what they call the mortuary of aircraft, right, in Arizona. Bring them out, revamp them, and make them available. And if you have them available, you use them first for cargo, air cargo, before you start using for passengers. So what are you seeing today? You're seeing the price of airfares increasing, you are seeing capacity constrained, and you're seeing flights. So Lufthansa is doing 5 flights a week into Lagos. British Airways has come down from 7 flights a week to 5 flights a week throughout the summer. And guess what? They are using a 777, which is only about 3/4 of the, and 2/3 of the capacity of a 747. So effectively, they are doing 50% of the capacity of what they were doing 2 years ago. Inflation. Now, this is the red line. You see there's official inflation. And the other line there, the blue line, is diesel. So while official inflation has gone from 12% to 16%, you've seen the price of diesel go up the price of diesel has gone up by almost 600% in this period. So is it diesel price that is driving inflation, or is it inflation that is driving the price of diesel? Our view is that the diesel price is driving inflation significantly. And since the diesel price went up in February 2022, you see diesel price was flat all along until December 2021. After Christmas, all bets were off. And ever since then, look at your inflation trajectory. The price of diesel goes up, inflation goes up. So, and that's where we are. The same thing with kerosene. So this is what we have today. The official inflation between June 21 and June 22. We have the price of flour driven by Ukraine. We have the price of flour has gone up by 70%, right? 15,500 for a bag of flour, now 26,500. And flour millers are telling me that it will go up to 28,000 before the end of summer, right? And why will the flour go up? During the planting season. During the planting season, yam, cassava, garri, plantain become more expensive, and so that's when the price of flour increases. Bread, I'm wrong, because we're showing here that bread is 400 and in June it's 700. I think the business they carried it yesterday, that loaf of bread is 750, and I've just been corrected that is, depending on the weight of that loaf, it is actually 850 naira. So rather than having a 75% increase, it's probably about almost 85 to 100% increase, because 400 to 800 is 100%. Rice, rice has been okay, 27,000 to 32,000, 18% Rice, so thanks to the rice pyramid. Pasta has gone up from 250 naira to 400 naira, 60% increase. Fish is not so bad. Fish has gone from 1,200 a kilo to 2,200. I don't know what kind of fish it is, but it's probably Chinese or what do you call it? I don't know. I have a name in my tribe, and I'm not going to say that on this call. So barracuda it's 1,200 to 2,200, 83% for fish. Chicken has gone from 1,600 to 2,600, 62%. Palm oil has gone from 16,500 to 20,000, and that is 21% up. Now, eggs. I stand to be corrected. The crate of eggs in June 2021 was 1,200 for a crate. How many eggs are in a crate? 30, right? Okay. Now, that is now 2,000. I think I'm hearing that it's inching up a little bit. So, but if you take the price of eggs, the price of margarine, the price of sugar, and the price of flour, that tells you why bread. And on top of that, the price of diesel, because you have to use diesel when you are baking. You cannot depend on NEPA. Petrol is 180, and I just read somewhere today that the value of 600 billion naira a day is what we are spending on subsidy there. So diesel went up to almost 900, it's now 810. Cooking gas is 10,000. It used to be 3,600. Sardines, I'm told, are now 700. It used to be 200. Your data bundle was 3,000, it's still 3,000, no increase. And the rent in your 2-bedroom flat in the mainland has gone from 700,000 to 1.2 million, up 71%. Your flight ticket used to be 22,000, 38,000, now it's 50,000, and you're talking about 100,000 naira. So what does that tell you? Official inflation is 17%. Our synthetic basket is saying 83%. But that's not all. The basket was last reconstituted in 2009. We tried to reconstitute our basket. So if what you were spending on transport in 2009 as a percentage of total spending has increased, what you're spending on rent as a percentage of your total spending has increased, what you're spending on data as a percentage of your total spending has increased. So the proposed weight for us and telecoms is 5%, it used to be 0.68% in the weight. Restaurant and hotels was 1.2, people don't, so we reduced that. Health used to be 3, we doubled it to 6%, but you're spending more. Education used to be 4%, it's now 6%. Furniture used to be 5%, furniture is a luxury, so we reduced that to 2%. Transport, we kept flat at 6.5%. Clothing and footwear, we brought down clothing from 7% to 4%. What does that tell you? It tells you that if we use that our own basket, inflation would have been 22.32% and not 17%. Okay, so what is driving inflation? Diesel, liquidity, exchange rate, and seasonality. Those are, you can see them there. So how is Nigeria compared to the rest of the world? Global inflation, US inflation 8%, UK 9%, EU 8%, Nigeria 17%. Don't forget we said ours is actually 22.32%. So theoretically, can interest rates bring down inflation? There's a big argument between Larry Summers and a guy called McKinsey. They were talking about it in the Wall Street Journal last night. Larry Summers is a seasoned economist, the president of Harvard University. He has his PhD from MIT. He's a professor of economics and mathematics. And his view is that increasing interest rates will bring down inflation, but will lead the world into a recession. And he gave it a 60-40 probability. But the other guy said, no. It will not lead to stagflation, it will not lead to that. It will actually lead to what they call a Goldilocks economy. So the jury is out on that. But let us see what has happened. Empirically, Ghana increased interest rates by 450 basis points, right? But inflation is still in record territory. South Africa increased 100 basis points. Kenya 50 basis points. So far, short term, the time lag between when you increase interest rates and when you see the transmission effect on prices is getting longer. So this is our inflation trajectory, as you can see. And why is it important for us? There's an inverse relationship between the rate of interest and the value of assets. Everybody on this call is an investor. Everybody on this call knows that if interest rates increase, the value of your assets, financial assets, will reduce. So if the Nigerian government or the Nigerian central bank to increase interest rates in July, which I think they will, then you can expect a correlation and a reduction in the value of those assets, but not all assets. But on the other hand, what we have seen is a massive increase in real estate values and housing starts. So we have seen an increase in supply of real estate, but also a massive increase in the demand for real estate. And that's what we are seeing. If you look at mainly Lekki, Ikoyi, Victoria Land, and the hottest market in Lagos is Yaba. You just can't find anything in Yaba. It's red hot. Okay, and I think Sankore is a group that I have invested and they're getting something upward of almost a 40 to 50% return on the Yaba assets, and it's like gold dust. You can't find enough. Here we are, and in certain parts of Abuja as well. So, but again, Abuja is correlated with political activity. The worst form of real estate in a downturn is hotels. Hotels suffered, but the best form of real estate in a recovery are hotels. But now it's a switched to Airbnb. So you have those short term, and that is what is causing a squeeze on real estate. So you can let out your house for 3 months, it's empty for another month or two, then you let it out again for 3 months. So those Airbnbs and service apartments. But what do you see in the service apartments? To run the generator, you put your service charge there. Then you now have to run the generator at 800 and something naira per liter. And so what are they doing? They're all converting to solar panels, expensive solar panels. So we've studied here that we think that the MPC will increase interest rates by 50 basis points, and the probability of that happening is 60% probability. So will the central bank increase forex intervention? I think I just read in the front page of the papers that the policy, I think this day of today, if I may say it, says Central Bank Nigeria's forex policy targeted at preserving the naira value. Well, we shall see what that means. Are they going to increase? They now have what they call a bi-monthly, twice a month auction, which has been there before. But the amount being put in the market is their trickles. So we'll come back to now the outlook. Oil price likely to fall below $100 a barrel. If you listen to the news this morning, there's a meeting taking place in Qatar as we speak between the Iranians and the rest of the world to put back that deal. If that happens, Iran has the capacity to put 2.5 million barrels a day into the market. That immediately changes the picture. Biden is going to Saudi Arabia, in spite of what happened to Khashoggi, to actually see what can be done. But we think that oil price could fall below $100 a barrel. Even when it went above $100 a barrel, Nigeria did not benefit. So, but this is where we are. And if the price of oil drops, the deficit increases, but Nigeria, like Kenya, has decided to reduce its borrowing overseas, and therefore it puts more pressure on the currency. So currency depreciation will persist. If you look at the deviation, the amber line is the I&E window rate, which is 419. This other one is now 612, in fact, 615. So that differential is very high. It's a recipe. It's a speculator's dream come true, and a recipe it's a paradise for round trippers. So why are we seeing it at 620? The summer travels have started. People have to pay school fees. People have to pay for medical. It's, the biggest embarrassment for Nigeria is that the former Deputy Senate President are now involved in organ harvesting in another country, right? It tells you, right? Former Deputy Senate President and the wife involved in Nigerian understating his age. But there we are. It tells you the opportunity that exists in dealing with medical tourism, right? And if it can be done properly here, we don't need to go through all of that and get ourselves locked up because of it. How many people have been, how many leaders of the world have been locked up in different parts of the world because of organ, where they take their own citizens and themselves to go and do an organ transplant in another country. Yeah. Mandela died in the Johannesburg hospital. Very few heads of state die outside their country. Okay, so the PPP value of the Naira today, right? When we did the computer, because of inflation, things have changed. That number used to be 573 or 587 Naira to a dollar. When last time we looked at it 2 weeks ago. Today, look at it, it is now 632. That's where fair value is. And how do you compute this? The price of Pepsi Cola in Nigeria is 150 Naira. The price in the US is $2.50. So if you exchange one bottle of Pepsi, you get an exchange of 60. When you take beer, right, it's 700 Naira for a bottle, big bottle here, 60 cl in a bar, and it's 90 cents in the US, so it's 777. The hamburger from Burger King is 4,900. It's $4.95. So it's the exchange rate is about 9.89, which is almost 1,000 Naira to a dollar. You go all the way. The big loaf of bread is 320 in spite of that. Nestle bottled water is 1,250 Naira to a dollar. Eggs are 1,217 Naira to a dollar. That's why you get this rate. So what does that tell you? It tells you that the Naira is likely to depreciate except something happens to the structure of the market, the supply in the market, right? And the transparency in the market. So why? Capital imports are declining, courtesy of the election, oil prices are falling, and the structure is such that it's just creating all sorts of problems. So foreign supply to the US sector has declined. By this time last year, manufacturers were getting 20% of what they bidded for. Now they're getting 0. So basically, the price of flour is now priced at 620 Naira to a dollar. As against airlines have $450 million blocked funds. And they are now, many of them are now selling tickets only in dollars. And you have what they call SOTI. SOTI means sold out and traveling in. So you have all these Indians and Lebanese buying tickets for their cousins who are coming to Nigeria, and they're using the IATA exchange rate of 444 and converting it. So that's another big racket. So look at that difference of 444 and 620 and multiply by the $450 million that is trapped there. Those are billions and billions or trillions of Naira. How is the investment climate? Global investment. The investors' age of exponentials, image generation, and all of this digital decade, stocks and crypto trading. But people are now beginning to learn that it is only when the tide is out, that we know those who are swimming naked. So see what has happened. Crypto went from $67,000 for one Bitcoin, $67,000 to lower than $20,000, $18,000. So imagine if you bought it, you bought 10 Bitcoins, you would have spent $70,000. Today, you would have been worth less than $200,000 in a matter of months. So interest rates are increasing, mortgage rates are up, and we don't know. So you can imagine what happened to Amazon, what happened to all these stocks. But again, compared to where they were 2-3 years ago, people are still in the money. So what does that call? It calls for the short run, like I said at the last outing, Short run, you look for direction. Long run, you look for value. That's the theme of investment. Sell high, you buy low. You look for direction short term, look for value long term. So where is the value and where is the direction? So this is capital importation. All these are just things to tell you that the Naira will be under pressure. So how have investors done? In the US equities, year to date, we've lost 34%. That is, the return was 17% negative, inflation rate 17%. So if you went there, you've lost 34%. Nigerian equities, you've lost 7% because inflation is 17.7 and the market has gained 10.6. Nigerian treasury bills, you've lost to 7%. Real estate, you've lost only 2%, but I think you do better. If your property is in Yaba, you've done much better. You've done 30%, 35%. Your property is in Victoria Land, Ikoyi, and Victoria Land, you've done more like 20 to 25%. You're doing, if you're in Lekki, you're probably doing better than that. Bitcoin, you've lost 54% plus inflation, you've lost 72%. So these are the other markets, South Africa, JSE, Ghana. So we've seen that, but Nigeria is 21% and all the others are down. But is the Nigerian market really what it is? No. The rally is very narrow. So if you bought MTN, Airtel, Dangote Cement and others, you make money. If you bought some others, you'll just be running fast to stand still. So consumer goods up 13%, oil and gas up 25%, industrials up 1.9%, banking down -3%, and that's what you have. So that's the US market and that's the Nigerian market side by side, and you can see that Nigeria is rising. But if you discount for the exchange rate, we are back to where we were. Okay, so what are pension funds doing? Pension funds are very conservative. So they are investing, or they are moving from equities to government, and all of them are anticipating an increase in interest rates very soon. So what are the scenarios? We've seen the president give an interview to Bloomberg, and he said that Nigerians are better off now than when they were in 2015. He says the policies are working and that the exchange rate management would have been worse. That's a point of view. So that tells us that current policies will remain unchanged between now and the next 2 to 3 quarters. Well, the other scenario is that things become so unbearable that we change, we drop subsidy, we drop all of these things. But I doubt that that will be the case, because the election will now become a referendum on the performance of this administration. We think that telcos will invest, because I think I'm told that next month, no, August, 5G is going to be rolled out across. And the 5G impact is not everywhere. Its impact is in certain urban areas. So urbanization is a major issue, and the concentration. And from what I'm told by the carriers, it's very clear that what we are seeing and what we are going to have is we're going to have southwest are the major areas where the average revenue per user is highest in the country. So you have it in southwest. Southeast is marginal. And then you have it high utilization in Kano and in Kaduna. FMCGs, yes, massive, both total beverage and alcohol, carbonated soft drinks, pastries, noodles. We are seeing a lot of that activity. And one way to measure performance of companies. So please count how many advertisements. If you watch the channels between 10 and 11, look at the advertisements, number of advertisements, and look at the sectors that are advertising. It tells you where the growth is. So you would see revolution of those property people tells you that something's happening in real estate. You don't put 2.5 million naira for a 2-minute advertisement if you're not making money. So it's either Adrian Homes or whatever it is. You will see MTN and Airtel in every advertisement. You would see Guinness, you would see First Bank, you would see what you may not see is insurance companies and all of that. So when the sectors that are recessive in these news items are the ones that are struggling, and the ones that are dominant are the ones that are putting their money where their mouth is. So investor sentiment going forward, we're driven by fixed income yields, continuous upward trend in interest rates, and people become comparing their returns from what they are getting here and what they are getting in other markets. The money is fungible, and whether we like it or not, investors will take that position. But inflation is not only here, it's everywhere. Interest rates are high here and high everywhere. Political uncertainty is here and it's everywhere. So that's where we are. So when night becomes day, everybody's house is covered. So growth in Nigerian equity markets will depend on sector, the level of consolidation within that industry, and the capacity of those people, those who invested well in advance. That's what you're going to be seeing. So you're going to see growth in Airtel and MTN. You're going to be seeing massive growth in certain areas. Dangote Cement, Goa Cement, Lafarge. You're going to be seeing growth in the FMCG, the Guinness and the Heinekens and others. Okay. So what your investors worried about? Inflation, high interest rates, and equity market downturn. But there's nothing we can do. Where are the pockets of opportunity? I've addressed that already. Told you about Guinness, MTN, Dangote, FBN Holding. We like some of these tier 2 banks. Our banking sector, I'll be very wary because some of them are veering into areas where they have no capital. And I think the chances that the oil sector reverses and catch up with them. What are the risks? And then we are closing out here. Political risk. Nigeria could be polarized between the north and the south. We think that it's possible, from what we see, that no candidate may be able to make the 25% of the votes in 2/3 of the states and local governments. In other words, you will need to get 25% of the votes in 24 states in the country. So if all the Southeast cannibalize themselves for Peter Obi, and all of the Southwest cannibalize themselves in favor of Ahmed Tinubu, and then the North splits itself between Kwakwanso and Atiku, then you'll find that nobody will get it 25%. What happens then is that the two, in a 5-man race, nobody wins. Then it becomes number 1 and number 2 by simple majority. Then the alliances come together. People make promises. But politicians' promises are as good as worthless as the paper on which they're written. And so we'll see what happens thereafter. So polarization between the North and South and a post-election conflict. Because one thing is to have elections, the other one is to have stability. And what happens, right? Risk to growth, political uncertainty and monetary policy tightening. If there's open rigging and all of that, and judiciary come up with all sorts of things, we may have a problem. Debt crisis will hurt Nigeria. So almost all the loans that we're taking have a moratorium now. So the chickens will come home to roost next time. In summary, let's conclude this presentation. GDP growth will remain positive but tepid, slower. Structural defects of foreign exchange market will remain major growth constraint. Inflation will remain high because of global and domestic issues. Investors will benefit from a further increase in interest rates and shift their portfolios around. Upward trend in interest rate will trigger sell-off in equity space. Stocks expected to shed off gains but not backed by strong fundamentals. Political uncertainty will make investors tread very cautiously. Thank you very much. Thank you.
Thank you so much. Thank you so much, Bismarck. It's always, can you hear me?
Yes,
Can you hear me?
Yeah, we can hear you.
Thank you so much. Always enlightening to listen to you, but obviously, even listening to you, there are questions that come up. Now, when we look at all the negative indices being up, core inflation, headline inflation, food inflation, all going up. MPC increasing its benchmark rates to 13%, currency depreciation, diesel prices going up, petrol scarcity, reduced power distribution. Would you say Nigeria is headed for a recession? And if so, how can Nigerians brace up for that? We also have the lingering war between Russia and Ukraine and its effects. How do Nigerians brace up for all of that?
Well, Nigeria is not headed to a recession. Nigeria is headed to what we can call stagflation, where growth is stagnant, inflation is increasing. But consequence of stagflation is high unemployment and high political risk of violence. So, answer to most of Nigeria's political leadership and direction and political followership. In sense that the followers, you can see everybody is trying to get their PVCs. The followers must hold the leaders accountable. They serve the people. They don't lead. They serve the people. So that sense of entitlement that is, I am your leader. That has to be removed from Mexico. They will serve the people. They will learn to serve the people. And that's a story. It's a sense of entitlement. To serve the people. We work with people. We are tired of fire. That's where we're going. Therefore, there will be no recession. Growth will be tepid. And once you change the paradigm.
Your line is actually breaking up. We can barely hear you. It's cracking. We could.
Can you hear me now?
Yes, we can. Yes, that's much better.
Can you hear me now?
Yes, that's much better.
Okay. Now, so what I'm saying is that the leadership will learn to serve the people. The people will learn to fire their leaders who are not serving their best interest. And that is the new dimension. And in that circumstance, or in those circumstances, you find that the economy will recover very sharply because the leakages in the system are far, far in excess of the injections. And the injections that are coming in are inefficient and suboptimal. And for want of better words, once you have the economy on the right trajectory, the people will benefit because they will hold their leaders accountable at all costs. Unfortunately, things like subsidy, exchange rate management are political and policy decisions which must be made, right? And if you don't like the smell of smoke, don't go into the kitchen. All these economies that are having market-driven, and you saw the South Africa, Ghana, Angola, those countries that embraced market reform and implemented it religiously, like Rwanda, see the results. You can see it there. So I'm confident that this will happen.
All right, thank you very much. At the end of your presentation, you said that the upward pressure will result in sell-off in equities. How do you balance that with, the recommendation for certain stock? How do you balance that?
Okay, remember I said that in the short run, you look for direction, long run, you look for value. The truth is that in the short run, the sell-off will be a short run, but long run, the value will be there. That's why we said a narrow rally, even the sell-offs will not take away the fundamental attractiveness of those sectors and those companies within those sectors. And that's why we narrowed it down and said those people who had made the investment decisions before now, who had the balls to make those decisions. I'm talking about MTN, Dangote, Guinness and others. They took the decision to invest and take a bet on Nigeria. A bet on Nigeria, but a bet against the currency. A bet on the Nigerian economy, but a bet against the Naira in the short run, knowing very well that the Naira will correct itself and become a value currency down the road. So those are the stocks that you'll be looking at. So MTN, in spite of the fine, in spite of all of the harassment, decided to commit themselves. They paid $257 million for 5G license. You don't, $257 million is a lot of money. You don't use that to bet, except you know there's a chance that you will win. So again, let me just correct that. The short-term sell-off and the long-term value play are two different things.
Two different things. Okay, one last question. Someone, Emmanuel Olufemi, is asking that the StarNet internet service recently obtained the license to operate in Nigeria. Where does this place the incumbent operators like Airtel and MTN?
No, I think MTN, that Scarlet or whatever it is, I think those are the guys that had the 5G, but MTN got one, but it doesn't matter. You can, people will sublet or sublease from you. This market is wide open. The fact that you got a license, no, it's not a license to kill, it's a license to create value and to compete. Yes, that's a duopoly, we see, but other people will come in, they will open up the space again, right? And other people will compete. If not, other people will lease out of your infrastructure. Remember when Main One was the only one with the submarine cable? Now you have submarine cables all over the place. Even Facebook has a submarine cable coming into sub-Saharan Africa. So we are happy with the investment, the commitment at a time when others are running away.
Okay. Thank you. Chinelo has a question about e-commerce trend in Nigeria and what are the statistics in terms of contribution to Nigeria's GDP?
I don't have all of that data, but I can tell you definitely formal markets in Nigeria, formal markets are less than 20% of total market activity. When I say formal markets, that is the shopping malls and the Teju show, all this, because we formalized some of those markets. But the informal markets, which spread outside, even if you have a market, the sprawling market outside Oyinbo is far in excess. The activity in the sprawling market outside is probably far in excess of the activity within the market. But if you have a stall in the market, you pay fees, you pay Yaloja, you pay Oba of this, Oba of that, and the chief and the ballet, all sorts of tariffs, and right, and then Omoniles and all of that, all sorts of things, harassment fee, extortion racket. So all of those things are part of the process. But the people that sell around, when people come, they run away with their baskets and all of that, right? So a lot of people, the Jumia and Konga and others, people now said, deliver to us, we pay the premium. Even they are now delivering groceries, delivering food. So we are seeing that shift to electronic payment systems. We are seeing that shift to using cards. We are seeing that shift away from cash. And we are seeing that shift from informal market. But the informal market is part of the African tradition. Because in the market, people announce marriages, burials, deaths, all sorts of things, sacrifices. With courtesy to African magic, the marketplace is the custodian of the African culture, morals, and values. So do the markets provide just an economic bargaining point? No. The markets provide an economic bargaining point, but also perform the anthropological role of making society stable, right? And in my tribe, they say if you are mad and you go to the market, then they say you will never recover from the madness. I don't know where they got that stereotype. I don't know.
So with the online markets, at least the madness reduce.
No. What it means that everybody now knows that you're a madman and therefore you're done. So, but that's what it is. So what am I saying in effect? I'm saying that the trend to electronic payment is increasing. Will it cannibalize the informal market to some extent? But the informal market still goes there. People, all the fancy women who go to what do you call it, ShopRite, then later on they'll go to Oyinbo, they'll go to Teju Show, because what do they go and do there? They have a customer who will help them clean their snails, who will help them do this, who will do that, who will grind the pepper for them. They cannot get away from that. They are part of that. So it will take another 2 generations before the Nigerian housewife and women will discontinue any contact with the marketplace.
With the market. All right. We still have questions pouring in. We can't take all of them, but if you can just address this very critical question, and Ezekiel is asking that what is the economic committee doing in terms of the disparity in exchange rates between the official and the black market rates, the issue of refineries not working and years of leakages, and almost 85% of revenues generated being used to service loans. You know, is this not dangerous for the nation, especially when we spend most of these loans on recurrent spendings? If you can just address that last question.
No, the question is one, what is the Economic Council is meeting and making its recommendations. Recommendations have to be understood and implemented. I think the president was very clear and addressed these three issues in his interview with Bloomberg. He says the foreign exchange policies now are the best in his judgment, and that failure to implement the current policies would have led to a disaster in the value of the naira. That's his point of view. He says that subsidies are good, subsidies are bad in theory, but in practice they're not tenable. That's a point of view. In economics, we have numerous points of view, and there's no silver bullet. So everybody's entitled to his opinion. You can only influence their decision-making process because economics is based on the theory of rational expectations. And quite frankly, one thing that is a scarce commodity in Nigeria today is rationality.
All right, thank you very much. Thank you so much. Like I said, we need to stop here because we have questions still coming in. It's always a delight to listen to you, and we look forward to, you know, future engagements with you.
At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear.
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth.